Assalamualaikum and good day, madam. I am the leader of Group 2. My name is Nur Farisha Shahira binti Muhammad Ruzi. Today, our group will present about the comparative financial performance analysis of Genting Malaysia Berhad and Sport Toto Berhad in Bursa Malaysia. As we know, Genting Malaysia Berhad and Sport Toto Berhad, two well-established companies operating in the gaming and leisure industry under the consumer product and services sector in Bursa Malaysia. For Genting is an integrated resort operator with casino, hotel, leisure and entertainment business. Its operations are capital intensive and asset heavy, requiring significant long-term investment. In contrast, Sport Toto Berhad operates mainly in lottery and gaming services. Its business model is less capital intensive, relies on frequent consumer transactions, and generated recurring revenue. Although both companies operate in the same industry, the structures are fundamentally different. Making this comparison meaningful, the objective of this study is to evaluate and compare the financial strength, performance, risk profile of both companies using financial ratio analysis over 2 years, it's 2023 and 2024.
This study is entirely based on secondary data obtained from the audited annual reports of both companies for the year 2023 and 2024. Financial ratio analysis was used as the main analytical tool covering 5 categories, which is liquidity, profitability, efficiency, solvency, and market ratio. Starting for liquidity, Genting Malaysia Berhad consistently demonstrates stronger short-term financial stability than Sport Toto Berhad in both years. In 2023, every 1 ringgit of current liability was supported by 1.96 ringgit of current asset, indicating a strong ability to meet short-term obligation. Although liquidity decreased in 2024, but every 1 ringgit of liability was still backed by 1.29 ringgit of current asset. In contrast, Sport Toto Berhad recorded weak quick ratio in both years. It remained below 0. This indicates that Sport Toto relied heavily on continuous cash inflow from operation to meet short-term liability, exposing it to higher liquidity risks. Moving to profitability, the contrast between both companies became more evident. Although Genting Malaysia Berhad maintained relative strong growth and operating profit margin, its overall profitability decreased significantly in 2024. For every 1 ringgit of revenue, generate only 0.0147 ringgit of net profit, while return on asset and return on equity fell to 0.57% and 1.6% respectively. On the other hand, Sport Toto Berhad consistently outperformed Genting Malaysia in return-based ratio. In 2024, every 1 ringgit of asset generate 0.0557 ringgit Malaysia of profit, and every 1 ringgit of equity generate 0.19 ringgit of Malaysia of profit. Despite operating with lower profit margin, Sport Toto efficient cost structure and effective use of assets allow it to deliver superior returns.
In terms of efficiency, the differences reflect the nature of its company operation. Genting Malaysia Berhad recorded extremely high inventory turnover ratios, exceeding 45 times in both years, which is typical for service-oriented gaming and hospitality businesses, where inventory holding is minimal. However, its total asset turnover remained low, below 0.40, meaning that every RM1 of assets generated less than RM0.40 in revenue. In contrast, Sport Toto Berhad achieved total assets turnover ratio above 1.5 times, indicating that it was far more efficient in generating revenue from its asset base. This shows that Sport Toto operates with a leaner and more efficient asset structure, while Genting's heavy investment in fixed assets limits its turnover efficiency. When examining solvency, Sport Toto Berhad carry higher long-term financial risk compared to Genting Malaysia Berhad. In 2024, Every RM1 of equity in Spot Toto was supported by RM2.37 of debt, reflecting a highly leveraged capital structure. Although Genting, despite an increase in debt levels in 2024, maintained lower overall leverage. This indicates stronger long-term financial stability and lower exposure to financial risk. While support Toto's aggressive use of debt enhanced shareholder returns, it also increased vulnerability during economic downturns. From a market performance perspective, Spot Toto Berhad continued to receive stronger investor confidence. It recorded higher earnings per share in both year and maintained a stable price-to-earning ratio, indicating consistent market expectation regarding its earnings sustainability. Genting Malaysia Berhad, however, experiences a significant decline in earnings per share from 2023 to 2024. Although its price-to-earning ratio increases slightly, it remained relatively low overall, suggesting cautious investor sentiment and limited expectation for future growth.
Okay, based on our finding, indicate that Spot Toto Berhad demonstrates stronger performance in profitability, efficiency, and market-related ratio, making it more attractive from a return and investor perspective. Its ability to generate higher ROA, ROE, and EPS highlight effective asset utilization and shareholder value creation, albeit at the cost of higher financial risk due to elevated leverage. In contrast, Genting Malaysia Berhad shows strength primarily in liquidity, inventory efficiency, and solvency stability. The company maintains stronger short-term financial resilience and lower long-term risk exposure. However, its capital-intensive structure limits asset efficiency and profitability growth. Therefore, not to deny it, Spot Toto Berhad can be considered financially stronger in terms of return and market performance, while Genting Malaysia Berhad is stronger in terms of financial stability and risk management.
Based on these findings, several recommendations can be made. As for Genting, we prefer that Genting focus on improving overall profitability by enhancing cost control, optimizing asset utilization, and managing its rising debt levels more carefully. In contrast, on the Toto side, maintaining strong profitability and efficiency, we also prefer that they should prioritize improving their liquidity position to reduce short-term financial risk. Lastly, the recommendation is for the investors. It shows that Spot Toto Berhad appears more attractive to investors seeking higher profitability, efficient asset usage, and stable market performance, while Genting Malaysia Berhad more suitable for risk-averse stakeholders who prioritize stability and liquidity.
In conclusion, based on the ratios analysis for 2023 and 2024, Spot Toto Berhad shows strongest overall financial performance compared to Genting Malaysia Berhad, especially in terms of profitability, efficiency, and shareholder returns. Spot Toto recorded higher ROE, ROA, and EPS. This indicates that the company is more effective in generating profits from its asset and equity. However, this strong performance comes with higher financial risk due to higher debt level and weaker liquidity ratios. On the other hand, Genting Malaysia Berhad shows better financial stability. The company has stronger liquidity ratios, which means it is better able to meet its short-term obligation. However, its profitability declined significantly in 2024. Lower ROA, ROE, and EPS and net profit margin indicates weaker profit generation. In a conclusion, Spot Toto Berhad is more suitable for investors who are seeking higher return and are willing to accept higher risk. Meanwhile, Genting Malaysia Berhad is more suitable for risk-averse investors who prioritize financial stability over high return. Thank you.